Good day, everybody. Brian here from quantlabsnet.com. We are on February 4th, 2025. I just wanted to go over this article I found, obviously online, dubbed the copy trading that has teens talking. So basically, let me just talk about copy trading. It's a hot thing, especially again among youngsters. Here in Ontario, if I wanted to do copy trading, I have to be registered with our Ontario, Canada Regulation Commission, the Ontario Securities Commission, and this is why I don't do copy trading. I think copy trading, I mean, it's a game that I could easily get involved with, but I don't choose it. And who knows? I may come back to it in when I move over to the UK in the next month, most likely. So that may come about. But let's go over the article here. Um, so right now, you could see here in the article found on TechCrunch.com, dubbed the copy trading app that has teens talking, the title. Um, so so Dub thinks it's the same for investing with news consumption and shopping, influence-driven marketplace where the trades of top investors with a few taps. TikTok meets Wall Street. So this is created by this guy Stephen Wang, 23-year-old Harvard dropout. And I believe Zuckerberg's a dropout from Harvard along with Bill Gates. So that's how influential uh, that college or that university is. And to get in there, it's something that it's not easy to get into. Anyways, Harvard dropout who began investing in second grade with his parents' blessing. Gub is bet in the future isn't about picking, but picking people. The app allows to follow strategies of traders, hedge funds, and even those mimicking high-profile politicians. Instead of making individual trades, Dub can copy trade their entire portfolio. So when it comes to copy trading, all you're doing is if I have a bot or some kind of strategy technology and through a messenger service, be it Telegram, mostly the popular one, or maybe WhatsApp, those signals when my system trades will send out a message out to the messenger to say a trade has been put on. So this service, Dub, has 800,000 downloads and now 17 million in seed funding with a new round coming. Less clear can Dub avoid the pitfalls of previous fintech startups. So he said this sounds like it's been inspired by GameStop. It's an interesting idea, um, but again, we'll probably get into the criticism of it. So there are still brokers charging this crazy $7 commission. Clunky brokers. Yeah, especially here in Canada, a lot of the big banks have really not a very good interface for stock trading. Interactive Brokers is better with the TWS, but that still has problems, like I've been reporting over the last few months. Um, so mobile first platform like Robinhood that invited people to trade for free. At the same time, social media is reshaping how people, in particular members of Gen Z, make financial decisions. Here's the caveat about things like Robinhood. I would not be using that broker as a point of reference. What Robinhood does is they will allow you to trade on their platform as a broker. They will not charge you any form of commission, but there's always a price somewhere along the line for Robinhood to grow. And where they grow is they resell all that trading flow back to the high frequency trading shops. They're able to get your flow before you even once you open up your position, and then the high frequency trading shops, namely, I there's a lot. Schwab does it, Robinhood does it, and they'll really sell it to all these brokers or HFT shops, and know your positions that are currently open, and they use that trading volume to trade against you, and then you will then at some point close out the trade, and you could probably lose money because the high speed trading institutions, we'll call them, will know about your trading, and as a result, you most likely will lose unless it's high momentum. But again, these sort of things are illegal here in Canada, Europe, pretty well a lot of places except for the US. We have a broker like that that does the same thing in Canada. They do not resell order flow for Canadian stocks, but they will do it for US stocks. Okay. So that's been confirmed up here, where the American side will allow trading flow to be resold back to the HFT shops, which is very shady. That's how Robinhood makes their money because they sell it back to the HFT shops. Okay. Same time, social media is reshaping how people, in particular members of Gen Z, make financial decisions. Using what I just described when it comes to Robinhood is not trading decisions. It's half trading decision. It's basically you have large institutions that are going against your trades, so you will lose money. One was trading from his dorm room because you really do anything at school. Wang came to believe these two trends, retail investing and influencer driven decision making, were on a collision course. So, with the GameStop saga, Elon Musk's ability to move Doge and Bitcoin markets with every tweet, and people's willingness really follow ideals and individual to a whole new level. Wang decided to drop out in 2021 and start Dub. The platform user ranges between 30 and 35, New York based Dub, clearly finding its way in front of an even younger audience in recent weeks. 15-year-old has asked more than once about investing like Nancy Pelosi, insider trading, remember, after marinating in Dub ads on Instagram. Pelosi isn't personally trading on Dub, it's a trader on the platform mirroring her disclosed moves. So, right here, that's what Nancy Pelosi's husband does. And remember, when you are, I guess in this case, chairwoman of the Congress, you will be exposed to a lot of quote unquote insider trading. And you'll see her returns. It's pretty crazy. And it's definitely not because she's an amazing trader. It's because I'm sure she's getting tips and getting exposed to things that she's involved with on insider trading. So again, with this Dub service, things I wouldn't be proud of. Doesn't make you a trader. It's equivalent of insider trading and the unscrupulous business practices of Robinhood as well. So the idea caught fire. Nancy Pelosi is up 120%, 23% with real capital. And this guy's proud of this. We made our customers millions of dollars since that portfolio was launched on the platform. One day this will get investigated. It has to be. Dub isn't free. Generate revenue from the outset, and today through a $10 per month subscription model, very cheap, I might say. Wang says further, top portfolios on the platform charge management fees, and Dub takes a 25% cut of these fees. Wow. I don't know what to tell you. Copy trading, I don't know. Dub has scaled in part through organic growth. Creators will say good traders in the app are incentivized to bring their audience. So Dub has invested aggressively in advertising, leaning heavily into meta ads, in particular acquirer ads, including on Instagram. Uh, I could go on about Instagram followers. I think they believe anything on Instagram. We've been really lucky where I think the broader American population, many believes there are other people out there that have an edge over them when it comes to the investing world. Here comes some fighting words, it sounds like. Question now is whether Dub will follow a similar path as other fast-growing fintech startups. Many found themselves in the crosshairs of regulators. Robinhood disrupted finance by making trading fees, but is also faced regularly scrutiny ahead of the 2021 IPO. Yeah, they are on the markets, on the stock market. That's how egregious this has gotten in the States. Ultimately, ditching a feature that showered users with digital confetti every time they make a trade. It's like the early days of pinball. Um, Dub is keen to avoid the same mistakes. So good on them They are now working with FINRA and SEC before launching to ensure model complied with financial regulation. We know about the SEC and how regulated it is, or corrupted it has been and probably will be moving forward. Doesn't matter. Look at how they dealt with XRP, Ripple, and all them. We didn't just navigate regulation at Dub. We embraced it. Like Robinhood is fully licensed broker deal. Okay, good enough for that, but still, what is done with Robinhood does not change the fact of what they're doing. They're playing its users as fools, and then there's going to be the same fools like technical analysis folks that will argue, "Oh, it's all fine and good." Okay, well, we'll see. Um, I think when I remember when the markets tanked, with Robinhood, they people try to get money out of their accounts with Robinhood, and they couldn't. So that's one of the dangers of being on Robinhood as well. It's all fine and good when people are making money. Dub is designed to educate users, not just encourage blind speculation. I find that hard to believe because you can promote it, people will not use it. They're just looking for the easy way to make money. They will not put the work in, understand what they're trading. They just go, "Oh, look at me, I'm making money." Okay, so he suggests it's safer for investors than Robinhood. That I believe because it's probably hooking into your own broker. I have a lot of respect for what Vlad, the CEO, does in making trading free, but at the end of the day, making it super easy to trade without expert guidance, without education, is really gambling for the broader population. Again, I agree with that. Wang points to the decision of Robinhood, along with Coinbase and other exchanges, to make the meme coin Trump available for customers ahead of Trump's inauguration. Uh, this is classic penny stocks pumping. People are making commissions on this stuff, and you'll see what happened. When it initially surged in price, it has plummeted since. Wang said, "I think fundamentally incentives are just misaligned between these big platforms and public companies that need to make money, and that generally their customers have probably lost money because it was a classic pump and dump with Trump, the Trump coin, and then there was a Melania coin as well." Recent conversation with Robinhood's Tenev about Dub proposed to TechCrunch that copy trading could become of greater interest to regulators and that Dub may not be under the magnifying glass because of its comparatively small size. I find that hard to believe because, from what I will tell you, the Ontario Securities Commission was the first securities commission or regulator anywhere that I know of that came hard down on broke exchanges like Binance and kicked them out. And they were about a year, maybe 2 years ahead of everybody else throughout the world. So as I said, maybe 2 years ago, they've now made it. You can copy trade, but you got to be regulated with the regulator to have a license to sell to offer that service to people of Ontario. So I would not be surprised they'll have this same sort of thing as well for copy trading as well. Either way, everyone is sold on Dub's vision. Oh, not everyone's sold on Dub's vision. Biggest knock against platforms, says critics, is that stock pricing underperforms massive investing over the long run, with studies show that most actively managed funds fail to beat the S&P 500. That I will tell you is about 90%. Okay, 90% will fail. And as a result, that could be said about human financial advisors as well. So that's to be fair, just overall. But when the markets with these type of platforms, these copy trading, when the markets go flat or actually go volatile or actually uh, dips, I don't know how these platforms will do in terms of making money for their users. Criticism, which Wang is familiar is, and that which he's quick to push back. For one thing, he argues that many such studies are cherry picked. I bet a lot of those are sponsored by passive investing index companies. So I think this guy's definitely got um, a shoulder. What do you call it? He's got a chip on his shoulder. It's a criticism which am. So he's got Ken Griffin here. This is one of the big buyers of the order flow from Robinhood. Wang, there's a reason that actively managed trade of hedge funds like Citadel thriving. If you look at what the ultra wealthy can do, they're given money to Ken Griffin to Citadel because they're consistently putting up non-correlated returns year after year after year. Yeah, that's because he's getting the order flow from large brokers like Schwab and Robinhood. And that's one thing I'll say about interactive brokers. They don't do that. One more broadly, look at the growth of the hedge fund space and the asset management space. There's a reason why it's growing. It's because they're making money for their customers using illicit ways. We'll leave it at that. Looking for any. Oh, so we got one comment. How do these portfolios compare against index funds, especially since Pelosi's disclosed are sometimes weeks out of date? That's true. So let's see the returns. I forgot to show this. So here's Powell, an insider at the Fed. He's up 77%. Insider trading? I don't know. Nancy Pelosi up 92%. Insider trading? I don't know. Bill Ackman, probably one of the better investors outside of the government, is up only 23%. 23% is pretty good, actually. So people that are smart see through this and will know exactly what's going on. Anyways, so let me show you at this website here at quantlabs.net. If you like what you're seeing, hearing, whatever you want to learn about high frequency trading, I've got a book on C++ HFT ebook. Now, here's a new thing that I just added for those that are still on this video. I am going to put in the description of this video. If you want to talk to me on WhatsApp, there will be a link on or in this video description for that. That's why I'm making a whole slew of new videos for you today. So be on the lookout for that. And you're actually going to talk to me on WhatsApp um, as well. Okay, so we'll leave it at that. Thanks for watching. Have a good day.